It's Accountech Bytes, your audit-approved amuse-bouche of accounting tech announcements this week with me, Tom Herbert. Thank you very much for tuning in. If you find this useful, please remember to like, subscribe, or follow, depending on your channel of choice. Let's get straight into the news. Now, as I'm sure you're aware, half the internet went down on Tuesday thanks to a latent bug in infrastructure giant Cloudflare. So things like ChatGPT, Claude, and Spotify were down. From an accountant's perspective, I heard reports of Sage, Bright, and Carbon being unavailable. But surely for most accountants, the saddest news at that difficult time was the fact that they couldn't get on Accounting Web. Yes, we had a couple of hours out. Many apologies. We are back up and running now. Let's get into the news proper then. So, new identity verification checks are now required for Companies House from 18th of November. Julia Penny has all you need to know on Accounting Web. This article and everything else in the video you can find via a link in the description. But it's fair to say that many accounting firms in the UK have not welcomed this move, or at least the communication around it. So Aaron Patrick, a QuickBooks chap and head of accounts at Boffix, took to LinkedIn to flag the impact of these changes on his firm, which, in his own words, absolute chaos. So the crux of this seems to be emails sent by Companies House to affected individuals, which flags that an accountant or solicitor should be able to help you. Patrick details that the result of this in the last 10 days alone has meant that his firms had to handle hundreds of support tickets linked to these associated changes, flagging the fact that they have effectively consumed a full-time week's capacity from one team member alone. Friend of the show and voice of reason David Winch points out it's common for firms of accountants not to offer ID verification help, to which Patrick replies that the letters or emails from Companies House suggested that accountants would be helping with this, so it felt the decision had already been made. Is Aaron's firm too nice? Could the Companies House communication have been better? It's an interesting debate. But have the new rules worked in terms of fraudulent incorporations? Well, Graham Barrow, co-presenter of the Dark Money Files, flags that the day before the changes came in, we had 4,600 incorporations. The day after, a mere 888. It'd be good to keep tracking that number. With the UK budget less than a week away, Tax Policy Associates has produced an online calculator to calculate your tax on employment, self-employed or partnership income, and shows how it changes under a variety of budget proposals. What it's getting at here is that there are earning levels at which there are anomalously high rates, and that's damaging to the economy. Bit of acquisition news, and Lloyds Banking Group is buying digital wallet and card aggregation platform Curve for £120 million. And it's fair to say that shareholders are less than impressed. Curve has raised more than 250 million since its launch and now being sold for less than half of that, with the largest external shareholder openly challenging the process. Some strong financial figures from Kiwi cloud pusher Xero as it reports its half-year results. So operating revenue up 20% year-on-year, adjusted EBITDA up 12%, and a 400,000 nudge upwards in subscriber numbers. Once again, stellar growth in the United Kingdom with almost 200,000 paying subscribers added, a change of 13%. But despite the 42% rise in after-tax profit, shares in Xero slid as the company missed its earnings per share consensus, and concern remains about the value for money they'll get from their acquisition of US bill-paying service Melio. Last bit of Xero news, and their flagship XeroCon conference will be returning to London and Denver in 2026. So Xero fans will want to circle the 8th and 9th of July 2026 at Olympia in London on their calendars, while their stateside equivalents will meet at the Colorado Convention Center August 19th and 20th, 2026. Staying west of the Atlantic, and the US tax authority, the IRS, has officially killed Direct File, a pilot program that offered individuals with the simplest tax affairs a free filing tool. So that will not be available in the 2026 tax season. It was launched as a pilot under the Biden administration to provide an accessible alternative to third-party services like TurboTax and H&R Block, and served about 300,000 taxpayers in the last tax year. Coincidentally, Intuit, the makers of TurboTax, gave Trump's inauguration party $1 million. Staying with Intuit, and the QuickBooks and TurboTax parent company has inked a deal with OpenAI to allow users to plug personal financial data into ChatGPT. So the $100 million multi-year deal pays for the use of OpenAI's technology to power AI agents that will apparently handle complex queries, forecast cash flow, or draft tax filings. In a press release about this, Intuit said the financial questions could range from how can I pay off my debt faster to how do I increase the profitability of my business or find new customers. I'm not saying this isn't clever, but I'll say the same as I did for the Xero announcement of a similar tool a little while back. This has the possibility of raising more questions and causing more work for accountants than it solves, at least in the short and medium term. A new study has shown that AI is actually bad at maths, with an S. We're British. So scientists affiliated with an online calculator maker. I was wondering when Big Calculator would strike back. So they posed a series of maths challenges to 5 leading LLMs, which all failed the grade. A shady tech behemoth Palantir and PwC UK has announced a multi-year, multi-million pound deal to accelerate AI transformation. No word in this press release over what that actually means, but I'd urge viewers to go and check out some of Palantir's other activities. Portland-based expense solution Expensify has launched a contextual AI expense agent that apparently combines chat-first AI automation with real-time human escalation. Some punchy quotes from founder David Barrett. Most agents are new AI washing of old rules agents, or disconnected Clippy-style chat bubbles slapped on top of a traditional interface. But Expensify's concierge agent is apparently different. Financial automation platform Dost has officially launched in the UK with a £6 million funding round led by Octopus Ventures. So according to this release, Dost does not rely on third-party OCR tools. Instead, it uses proprietary AI models trained specifically for complex, high-volume financial document processing. And there's more money in the AI accounting investment pot, as Maxima has raised $41 million in a Kleiner Perkins-backed round. So according to Yahoo, Maxima argues that its AI platform can better automate tasks such as reconciliation and journal entry than dominant legacy providers such as SAP and Blackline. Some excellent research from the folks at Diginomica here. They found that while 93% of organizations now use AI in some form, only 21.4% report success rates above 80%, while high-profile implementations are delivering disappointing returns. Let's get on to some new stuff now, and Iris Elements has issued updates to its biometric ID checks to include submitting a secondary document, added support for those companies' House ID verifications for company formations and company secretarial, and in Iris Elements Practice Management, they've added the ability to access more than one client portal. A bunch of updates from our favorite Estonian practice management platform, Uku. They've made some changes to their billing, added an integration with Directo, and added bulk update client workflow from company task templates. Compliance tool BGL, through their CAS 360 product, has added BGL ID, an ID verification and AML screening solution to help users stay Companies House compliant. Last week I mentioned about Adfin's credit control autopilot tool. Well, that's officially available to all Adfin users who can bring in their own email address into Adfin, create templates, and potentially hand over invoice chasing to Adfin. Let's head over to MTD Corner now, and a developer with software in the MTD testing program has flagged a flaw in the sign-up process that has limited numbers in HMRC's pilot. So Paul Aldridge is the founder of online digital record keeping and filing service TaxNav, and he flagged the flaw where if someone tries to sign themselves or a client up for MTD testing and accidentally picks 2026-27, then they're mandated into that year and they cannot then opt out and rejoin in the appropriate testing year. This, according to Aldridge, has restricted the numbers, meant HMRC has not been able to confidently test every aspect of the system, and could point to a potential softening of the penalty point regime due to come in April. But let's not count on that. Last call for our webinar next week. Join Jake Smith, Chris Downing, and Lee Coombs to find out how to solve MTD for tech-averse clients, Tuesday, November 25th at 11 a.m. Sign up via the link in the description. A couple of new vendors that I found on HMRC's MTD software page. The latest to join the alphabetical bun fight at the top of the list are 123 e-filing. They seem to already handle MTD VAT returns and appear to be a bridging solution. Joining them is fellow bridging solution Vital Tax, or perhaps 123 Vital Tax. And also in development is the MTD solution for Powered Now, which appears to be MTD functionality for a wider job management tool. Let's take a quick trip to the integration station, where expense management platform Pleo has announced a tie-up with FreeAgent. And a quick reminder to listen to our podcast. Intuit's global product director Nick Williams joins the latest edition to discuss AI agents and growth. And we also talk tech founders, preview the budget, and go over AML compliance. You can find that by searching for Accounting Web wherever you get your pods. And that's your lot for today. Thank you very much for watching. As always, if you like that, you can get more accounting tech news by signing up for my email. Enter your address and hit the yellow button. And every Thursday morning, it'll be in your inbox. I'll be back next week with another video. Bye for now.